Hi, this is Kevin, and this video is about the fact that life goes by. It seems like in a blur. Today you start out, you're a child, and then you're a teenager. Next thing you know, people are depending on you. And the words life insurance and annuities are words that have tremendously negative associative power. And so I prefer to use protection for loved ones and income in retirement. Now, I do not sell insurance or annuities, although I do help people get these. Many times non-commissioned, but if you do have someone who you work with, I'd be happy to take a second look. And so the first thing is my training as a CPA I think's really helped with the taxation of all these products. And many times they're sold as tax ways to shelter tax and defer tax. And so I do have a good understanding of that. The CFP curriculum, anyone that's the CFP has to at least have a rudimentary knowledge of life insurance and annuities. But the real reason why these products are so important to me is that they're important to clients. They're important to you. And so I am very happy to help you. Again, I don't sell them, but just help you in your journey. And so for me, this is what life insurance means. Now, this is one of my children, Christopher, and this is my wife, Hattie. And when I got life insurance, I don't know, a dozen, 14 years ago, I remember just having a feeling that I was very satisfied that I had something that could protect those I love. So that's the first thing to tell you, is that's the reason to get life insurance. And then when I see this photo with the little sippy cup and the blanket, again, it just makes me want to go out and buy more life insurance to protect my family. Now, life insurance at its simplest, term life insurance is probably for 90 to 95% of people, term life insurance is the way to go. It's cheap. You can buy it from the internet. You can buy it from an agent. It's a very low commission product. And again, I would just shop around and make sure the insurance company is good. It's when we get to the permanent life insurance when things start to just get crazily complicated. And so here are the different types of insurance. Term. Low monthly cost. Now it says tax advantage, but I don't know how much of a tax advantage it is. If you die, your money goes without estate tax, and so that's the tax advantage, but someone has to die. Now whole life has a cash value component. Universal life adds flexible payments, and in the years when interest rates were going crazy, people loved these because then they didn't have to make premium payments as their cash value went up so high. And then, of course, interest rates came down, stocks went up, and what happens when that happens? Well, everybody wants to buy something that's just gone up. And so then insurance companies said, all right, we'll give you this. You can invest in the market. And if the stock market goes up, again, you may not have to pay as many premiums. And now they have indexed universal life as well, which it sounds extremely alluring. The upside of the market without the downside of the market. There are a few caveats, though, with indexed universal life. I would really draw a line here and say the majority of people can get term when you have an insurable interest, and then as you get older and your kids or whoever you're helping or taking care of no longer needs your help, then you no longer need the insurance. So again, this is Kevin. He is a 16-year-old. My son, he's now driving, but still, I am so happy to have insurance to take care of him if something does happen to me. There's Christopher and my family. My parents may be in an annuity, and I'm kind of kidding about that. But what is an annuity? Well, an annuity is when you have a pile of cash and you want to turn it into an income stream. And life insurance is in case you die. I look at annuities as in case you live too long and you want to continue to have money to take care of you and not be a burden to others. There's a tax benefit to annuities, but don't let the tax tail wag the dog. Now, you have 401k, IRA, you have Social Security benefits, which are extremely important, and then you may have a pension, and an annuity can either augment all of these things, or if somebody has just an extreme fear of volatility, that's the other time when I would look at an annuity product. The first annuity was actually, this was interesting to me, Railroad Retirement Board, and they made an annuity because the 65 and 70-year-olds could no longer swing a hammer. They had them on the switches, and trains were crashing because people were falling asleep. So they said, okay, the people that are older, we're going to pay you for the rest of your life not to work. And I thought that was pretty brilliant. So Social Security, it's an annuity. Every month you look for your payment. So again, the easiest way to think of an annuity is you take a pile of cash, you give it to the insurance company, and then they pay you a series of payments. Now the problem with this is people don't like to irrevocably give their cash to an insurance company and never get it back. So now insurance companies have gone with fixed, immediate, variable with guaranteed lifetime benefits, indexed annuities with guaranteed lifetime benefits, life annuities. I mean, it's a mess. It truly is a mess. And every time that someone has an objection, the insurance company will come out with another product. And just remember this, anytime you have an objection to what the product is, and they say we can fix that with a rider, well, you're paying more for it. So this is Michael Kitces. He came a few weeks ago to speak for 4 hours at the FPA. Awesome speaker. He was somebody who was an insurance salesperson and now has become just a tremendous thought leader in financial planning, and he has helped me understand the good, the bad, and the ugly of annuities. I still think 97% of them should not be purchased, but there are cases for annuities. And thank you so much for watching, and get in contact with me if I can help. Thanks.